Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. What is today? Today is Wednesday. What a week so far. Lots of movement. You know, today we came in and the futures are down like 15, 16 handles, which was a good thing, considering that yesterday we closed on our low, so traders looking for a follow-through, got paid. And the question is, would you cover and then look for a spot to get long or cover or even press? My thesis this morning was into 190.50 in the spiders, which I already started covering pre-morning call. I was looking to get flat and then figure out if we could buy that area. Okay, whether we would push below, stay below, and then get out of the way, or push below, reclaim it, and put together a nice red dog reversal, to hold that Fibonacci retracement level and to hold higher to keep this recent move in check. So it did take time. It took till the oil number came out, which helped rally the oil, and then you had to wait till about 11:45 for things to start to ignite. So let's just take it to the charts. You go to the chart and you'll see, I've been talking about this double bottom in the SPX, which was at 1812, and then here again. Okay, this is when we basically took out the 8-day, took out the 21-day, and got as high as this 1950 resistance, but failed. So came in yesterday, opened lower, and then look what happened today. Almost a perfect red dog reversal around the Friday low. Now in my note, I listed the basic pivot for all the sectors right around this low to figure out, can it hold it above it and rally, or break below it, stay below it, or break below it and come back up? Well, it broke below it, came back up, actually even reclaimed yesterday's low, which was 1919 with the 8 and 21 day. So it's back above the 8 and 21 day and closed well. So now the question is, do we need a little bit more time because the 50 days moving down? And I would think next time we get to this area, maybe with another inside day or so, we probably get above it. And there's probably some, more signs today that we could see this 1990 area than not. We'll see how we open up tomorrow, but that's kind of what I'm thinking. I tried to give you the analogy going back here. You had your low, you had your red dog reversal here, took back the 8-day, took back the 21-day, came into resistance, okay, pushed above, held the 8-day the entire time, and went, pretty far. So here, we took back the 8 and 21-day, we're now above it. It had its chance to close back below it and fail, and it didn't. So one thing I would think is you shouldn't have such short on the brain here, even though volume was light, but at least, it's acting more constructive. Okay, so we'll see whether or not, being more constructive equals higher prices. You did have a big travel range from the low to where we closed, so, you might not have a blockbuster open. You might need to pack and fill a little bit, but, the bull stepped in when, all the guys out there were saying, oh, we got to go back to lows already. I was like, why is it just because we had one down day yesterday and we retraced a third of the entire move? Why is everyone talking about going back to the lows already? Let's see how we hold. And the SPX holds pretty well. You go to the spiders, which is what I was trading. Okay, look at this, the chart here. You have your double bottom, then you had a gap up that never got filled, a gap up that never got filled. So it came into basically the prior highs, and it happened a little bit too far, too fast with the oscillator getting to plus 85. And then today, you had your red dog reversal around the 190.45, traded below, came back above. You could have been a buyer here, put your stop there. The low of the day was 189.32, so $1.10 was your risk for almost $3 in upside. And then the good book says you hold the third just in case this follow through. And then now here's the 50-day. If you want to take a quick look at it on the 5-minute, just to show how there was an igniting bar. Okay, first, look at that. Beautiful. Here was, the push below, to make that low. So this was almost a 5-minute red dog reversal. Came back up, created like this little descending triangle here above the prior low. You could have been a buyer here, or you could have waited, for it to take back the prior low of 194.45 from over there. Been a buyer. You had a quick move to almost 191.50, which filled half the gap, came back in, retested pretty much the high of the morning, okay, which it broke above, held, got tight again, and then boom, followed the 8-day all the way up, pretty much into the close. So, here is your 5-minute snapshot if you, trade things, for tactical purposes. So for me, I covered most of it into this spot. And then, I tried it once here, lost a little bit of money. Then finally, right around here, I tried it, had a good trade, sold into that. Actually put some bids in to buy when I went to the gym for PT, physical training, and got filled. And, then I kind of traded around it the entire way, and that was your close. And you want to go back to the daily chart, there you are. So we'll see, if we hold in here and it could break above. A few, helpful things that, more on the constructive side is, IWM also talked about 99, potentially holding besides a red dog reversal, and the Russell led all day. Russell hasn't done that in a while. If you look here now at the Russell, you had, this 4-day up move kind of stalled, and then you had your, red dog reversal right around the prior pivot. It didn't even break below the low from Friday, which is, that was the last Friday low right here. This was, actually tagged at 99.11. Okay, what did it go to today? 98.97. So if you would have bought it when it reclaimed this low here of 99.11, you were really risking only, 25 cents, and it closed at 101.60. And this looks like something, if you had to be long overnight, a good thing to be long. And the next spot would be here. So this finally showed a little relative strength, and it held the 8 and 21 days. So this could, be a welcome sign. We talked about JP Morgan. JP Morgan went out really weak yesterday. I started buying that too early and just didn't go back to it. Sperling Mark did a great job buying that, buying Citigroup, buying some of those banks. JP Morgan traded into that gap, and then also did some type of, red dog reversal into this, 55-ish area. Okay, came in, pressured. People probably got stopped, said, oh my goodness, we're going back to the lows, and then all of a sudden it reversed and closed well. I guess now we'll see if it, could rally back to here. This is one big range now, but it is helpful when the banks hold, areas, and this gave you a nice one, especially if you sold 59s, why not try the 55s? So that was a focus today also. The IBBs, I don't know what it did. I wasn't even looking at it. Nothing special. Did trade below this pivot and reclaimed it. And then you had some high beta names. So now listen very close, okay? I would say that Amazon and Facebook, we talked about, would these upper levels break? Some guys caught quick shorts because they broke the upper level, gave you a downside follow through. But then when they reclaim that upper level, you got to cover and maybe switch gears. That's why those pivots are so important. So you look at Facebook, which was very strong. Facebook did break below. Guys were looking at, I think I listed 103.80, okay, which was the 21-day, or right here. It broke below this and reclaimed it. So if you didn't think that that was good enough, when it broke below this spot, if you use this as the red dog reversal below 105.12, and instead of just shorting it all the way up, saying, what Red Dog said, if it breaks this, it's, be careful. It broke below, got people out, and closed well. And now we'll see if it could break above this. But all in all, this bearish channel, okay, is good, or good for short if you break below and stay below. This broke below and reclaimed it. So you switch gears there. Amazon did the same thing. I was talking about 341 or 541. Would it hold this upper level? Oop, I drew my little arrow wrong there. Hold on, let's get this. Oop, nope. There it is. One more time. Gotta get my eyes straight here. So anyway, the level that we talked about was actually 541. Some guys used it to short real quick when it broke below, came in, held the 200-day and reversed. So this is still intact. Did it try and break below? Yes. Did you make quick money short if you had to be a surgeon? Yes. Did it reclaim it? Yes. So it's still in this channel, so the trade stayed the same. So all in all, today could have been one of the days where the bears took control and took it back from the tactical bulls. Remember my two charts this morning? I said, guys are saying we're in a tactical bullish market or a tactical upside move, but in an overall macro intermediate bear market. So the question was, after yesterday's down move with this morning's follow through, was the tactical bull move over? We talked about, would 190-ish hold, and will the bulls make a stand? Well, they did. So at this point, short term, it's still in the bulls' hands. We'll see what happens tomorrow. Oil needs to hang in there. Banks, obviously, hopefully we won't get a curveball, but all in all, great little tactical trades, and I would think most traders probably went out a little bit long considering the type of reversal that we had today. So we'll see what happens tomorrow. If we open down 6-7 handles, probably could buy things to go green, the ones that were strongest today. If we open up 6-7 handles, you sell a little bit, you get good follow through, and then we see how we deal with Monday's high and figure out whether we can get that overthrow move to guys who are just short, cost averaging it up because they think we have to make new lows. But market's telling them right now, it's saying something different until another time perhaps. Have a great day. I will see you tomorrow at the call.